Today on ET Now, we are joined by a very special guest, and that is none other than Mr. Sanjay Dutt. We all know him as an actor, but today you're joining with us as an entrepreneur. You have made an investment in Cartel Bros. That's an alcohol beverage company. Firstly, let's talk about that investment. Why did you pick out this company? What is it that you thought was interesting here?
Firstly, Moksh and me, we know each other for many, many, many years now. And we always wanted to combine and do something together. And he came up with this with Glenwalk, and it kind of really appealed to me. And I can't say it's a startup company, but it's kind of a startup company which I've always believed in kind of promoting startup companies in our country. Like Dotown, the sneaker company, I've invested in there. And it was these young boys who got together and started this company. And Sujit Jain and me kind of invested in it, and we got it going. So, it's the same way, I just felt that this company could really grow, and I would love to be a part of it.
So grow, and obviously, as a consumer in India, we are also updating ourselves. We are also going premium across boards, whether any segment that you see. And even in alcohol beverages, do you think that we could see this further growth, and that would lead to better improvement in terms of the investment that you've made for Cartel Brothers as well? Is that a trend?
Absolutely. We have to make a difference not only in India but also in the world. India has to be number one in beverages also. Why should it always be America and Europe? We have some amazing people here also who are big in beverages, and we should reach the world market, and we are capable of doing it.
Absolutely. Not India, but also the world market. Do you think in this market that you have currently made an investment, we could see overall across the country, see more investments, growth coming in here as well, especially in the startup world? That is also something that is the growth, and that could be the next lever of growth for the country as well.
Yeah.
And also just in terms of, I want to understand, you have invested in startups, you've spoken about the sneakers startups as well. What is looking attractive to you other than these investments that you've already made? Where do you think we would see more investments, or where will we see more investments from you?
Well, like in like apps where when it's based on education, on somebody had approached me for that, which is very, very, very amazing. On like Byju's and all. There are some startups like that which are there, which I would love to be a part of. I can help. And beverages is there. There's so many other things. These kids of today, they're so innovative. They make some amazing things. They're wonderful, but they don't have the resources. And if we can be the resource and help them grow, why not?
Anything interesting in the terms of world of AI? How do you think that would move your investment? Because artificial intelligence has taken a big part in terms of that as well.
I know, but I've not thought about that. Maybe that I've looked at it more in my side of the world as the film industry, where we're thinking about AI and stuff like that. Yeah.
That's interesting to know. And one more question in terms of your journey. You started as a brand ambassador, actor, and now an entrepreneur, not just one, but a couple of investments that you've made. What is that? What would your journey be? Could you just tell us your journey from there?
Well, like I just told you, is that I would love to be a part of some very interesting startup companies where I can help these young entrepreneurs to take a step in this world, and I would love to be a part of that. And it's a very interesting game because it's a learning process for me also, because I've always been an actor and I've always been in the film industry. I've never ventured into something like that. So it's very interesting to learn this side of the world also.
And absolutely. So I have to ask you a question on financials, because you're a financial news channel. How do you manage your wealth? Equities, real estate, gold, what is it? How do you manage it? How do you manage your wealth?
I've got the best manager, and that's my wife.
That is
Yeah.
So all your money is done, all the savings, all the wealth is managed by your wife.
Yes.
So quick rapid fire, if I could ask you, obviously, in terms of one best investment that you could tell me.
One best?
Investment.
I think Glen Walk.
One mistake that you have learned from in investing in startups, or you would advise?
I made too many mistakes.
Something that we should learn from it then. Which mistake is that someone should for surely avoid?
I think you should watch my movie called Sanju.
Oh, so that is, all of us have watched it. Surely you're a big fan of that as well.
Yeah.
One investment advice you would want to give anyone? Investment advice.
Like I said, I mean, I love helping people, So, I mean, in investing for a startup company, and I'm not saying that, don't do business. But I mean, if you feel it's interesting, if you feel that these kids have made something interesting or have an interesting company where they need some kind of financial support and you can take an equity out of it, why not?
Bet on the youngsters as well and give them a chance as well, right? Because we all want that opportunity.
Yeah, absolutely.
And lastly, a fitness or a health advice you would give to youngsters in today's day and age?
Well, all I can say is that keep your diet right and discipline yourself and be in the gym. I think that's the key.
And absolutely. Now, given this investment, I have to ask, whiskey, vodka, gin, which would be your preferred drink?
Vodka.
Now, new age tech companies, we had seen them in focus for the longest period of time. We've seen a fall coming in, correction in valuations of these new age tech companies. And now, what we understand and what is coming across is that new age tech companies, whether they look at Paytm, Zomato, Nykaa, Policy Bazaar, Cartrade and Delivery, have actually together regained nearly 1/3 of the wealth that the investors had lost last year. Let's go across to my colleague Sharad, who is going to give us more details on how have they managed to gain their wealth, what are these stocks doing as well.
Well, yes, new age tech stocks are in focus today and they have recovered almost 1/3 of their market capitalization in the year 2023 itself. Now, put it into perspective, the 7 new age tech stocks, be it in the fintech space or the consumer tech space, has added almost 44,000 crore rupees when it comes to market capitalization. And even the foreign broking houses, if you look at, they have actually upgraded their target prices when it comes for people. Tech as well as Paytm. Now, what are the main reasons for this, Ali? That is something which we should be focusing on, and the companies are focusing on their profitability and also reducing their costs. Apart from this, also they're rationalizing their acquisition strategy that actually helps control their bottom line numbers as well. Apart from this, also operational and the financial metrics over the last 2 quarters, they have improved, and we can see a significant market capitalization being added for Zomato, Paytm and even PB Fintech. Apart from this, there is a word of caution in the street, and the analysts are expecting that the promoters are now very profit conscious, and even the anchor lock-in periods are opening up. So we might see a selling of stake happening from the VCs and the pre-IPO investors in the new age tech stocks. And lastly, the global interest rates, they haven't peaked out yet. That means the growth stocks may underperform going ahead.
Thank you so much for that, Sharad. But let's move on and talk about Byju's, because it seems like more trouble is coming in for Byju's here. And this is what is inside, because the EdTech merger has actually said that the statutory auditor, Deloitte, has actually resigned due to the delay in company's filing of financial results. Byju's has now actually hired BDO as an auditor for the company. So yes, seems like more trouble is brewing for Byju's. And let's go across and actually listen into what K. Ganesh had to say about the same as well.
It indeed has been one troubling news after the other for Byju's for many quarters now. It's really unfortunate because it is the highest valued Indian startup, edtech startup, even globally valued edtech startup. So it's something of concern to all of us in the Indian startup ecosystem. But before trying to beat somebody who is down or beat up on a company that is facing troubles, I think we should distinguish between what are the real troubles and what are just the perils of doing business or being in business. So I want to differentiate the two. For example, to be generous or to take the easier part, valuation of markdown valuation by investors in their book is required as a mark-to-market requirement. It's an accounting entry. Nobody has raised, Byju has not raised money at a lower valuation. So something like marked down by some of the investors in the cap table of the valuation is purely accounting book exercise. I mean, obviously it's not nice, but that's the state of the market. Public listed stock have all fallen down. So those are the easy thing to handle. Similarly, the layoffs, every company is laying off because the growth has not happened. They have also laid off. So that's also okay. But definitely concerning issues are the fact that you are taking your lender to court, you're not made payment. That is really troubling and troublesome. Similarly, if you take the ED rates, it's okay. ED has got a enforcement directorate, does have a responsibility to investigate and do that, whether something happens or does not happen. I wouldn't attach too much of significance. But everything is negative. On this auditor resigning point per se, the fact that Deloitte was not signing off, there was a differences of opinion on revenue recognition, on the way revenue should be recognized, was quite well known. So per se, the resignation now and a new auditor appointment now, that development I'm not very concerned about. The fact that they have not been able to converge, they have not been able to file the audited returns by the due date, and there still is a lingering difference of opinion on accounting entries is really troublesome. And as the lenders who have filed a case have said, one of the covenants is timely filing of audited financial results. If that does not happen, it's a concern.
Thank you so much for that. Let's move on and talk about Ripplr. That's a logistics startup, and Ripplr actually in the last month managed to raise around $40 million in a funding mainly led by Fireside Ventures. Now, my colleague Avan Dubash actually caught up with Santosh, the co-founder at Ripplr, to talk more about this and the company's prospects going forward. Let's go across to that conversation.
Time to focus in then on tech-driven distribution logistics startup that's based out of Bengaluru. That's Ripplr. The company has recently undertaken a fundraise. We talk a little bit more about their financials as well as what the company's growth plans are in a fairly competitive environment. Santosh Dabke, who's the co-founder at Ripplr, now joins us on the show. Santosh, thanks so much for taking time out. Clearly, the startup ecosystem has been hit hard. There's a capital crunch. We're talking about a funding winter. And at a time like this, just recently, we have seen the company managed to raise funds. Can you just walk us through the details of your latest fundraise?
Absolutely. Thanks for having me the show. And yes, as you rightly said, last year has been a very tough year for most of the startups because we saw the winter funding coming in very, very strongly. But fortunately for us, since our business model has been, a very, very strong and robust and operationally profitable, we have been able to attract the, amount of capital that we have raised. And that's the beauty of our business. The focus for us, as we move forward is being on profitable growth because, in the last 4 years, we have grown exponentially across all the locations in South. Now the opportunity for us is to look at consolidating our position as one of the largest B2B partners for all the major FMCG brands and expand our network in North and West. So that's the future opportunity we see ourselves. Also supply chain management, where the government focus on the logistics sector is being very, very strong, and where there are a lot of global players who are ready to partner in India. I think that is also one space which we are trying to explore very, very strongly to look at the next phase of growth for us as a company.
So what will this fundraise then be utilized towards?
So there are 3-4 elements, on the fundraise. One of the most important thing is, we will be strengthening our tech platform because, tech is a very important tool in terms of scaling up. So today we are in 12 cities. The next opportunity, what we see is to strengthen our tech, so most of the funds will be utilized in terms of strengthening our tech, hiring new teams across the two zones, which is North and South, North and West. Because North and West contributes more than 60% of the Indian business, and we plan to expand our network across these two zones in the coming future. So the fund utilization predominantly will be in tech, strengthening our tech platform as well as expanding our network in North and West zone.
Okay, now Santosh, there are claims from the company that you guys have grown exponentially over the last 4 years, but let's really put that into numbers. As per what I have, the FY22 operating revenue is 275 crores compared to 47.8 crore rupees in FY21. Is that correct? And where do you see your revenue scaling?
Yes. So since the 2019, we started 4 years back in 2019. I think the growth has been really exponential. We recently closed our last financial year roughly with a number of 900 crores revenue, which is around 880. So that has been the scale up over previous year. We have grown 3x over last year, and 6x over the previous year. So I think there has been a exponential journey as what we see. Because India is a very lucrative market when it comes to FMCG a business, and the demand exceeds far than supply. So today the challenge is not about demand for us. The challenge is about how we can cope up to the supply. So the opportunity is huge, and in a market which is $100 billion as of now, likely to double in next by 2025, I think there will be a huge business opportunity which will come our way in terms of strengthening our supply chain capabilities at the back end. Also partnering with distributors and retailers to give them, the tech platform where we do a lot of predictive analysis, a lot of data analysis in terms of, solving the reach and discovery problem of, a lot of channel partners which we are working with.
No, so you closed FY22 at 900 crores, or you're saying FY23?
FY23.
FY23 you closed at 900 crore rupees. Okay, but the company's losses, if I'm not mistaken, that's continuing to balloon close to 9 crores in FY22. What's the plan to lower your losses to turn profitable?
So if you look at the number, in terms of the growth, I think our growth far exceeds our losses. So that has been, the most focus for us. And like I said, the fifth year is, this year, this financial year of 23-24 is going to be very important year where, we are, planning to turn profitable, because, that is very important from a startup point of view, because, for us, valuation, is a vanity and profitability is a reality. So the focus for us in the fifth year is really to look at how fast we can become profitable. And that's the, opportunity which we see, because at an operational level, we are already profitable, but considering the kind of expansion which we have done in last 4 years and the kind of investments which have done in last year, I think that is where, the investment has gone through. But I think this year it will be the year where, we will be looking at consolidating our position, and making, achieving towards the profitability of the overall company.
Okay, that should be the hope, because eventually now we're talking about the term profit con from unicorn, which is actually companies that have managed to hit profitability and sustain at those levels. So that's fairly critical. But Santosh, apart from that, walk us through the logistics services, who the big customers are that you currently cater to, and how you plan to expand your base of customers.
Absolutely. So like I said, about the logistics as a sector is one of the largest sectors for the Indian economy, or I can say it's a pillar of the Indian economy. So if we are talking about a 5 trillion economy, I think that's where the government vision is. Logistics will be the basic pillar in terms of how it grows, because every single company, every single sector requires logistics services. And with the kind of infrastructure which we have built across, all the cities which we are present in, I think, we stand to gain the most in terms of expanding our reach, So our focus in logistics will be across multiple segments. So we are targeting manufacturing, we are targeting pharma, we are targeting e-com sectors, we are targeting, your business lines. So there are a lot of, guys who require warehousing services, first mile, mid mile, last mile. So, we will be aggressively looking at strengthening our supply chain and logistics business as well, because that is also one of the growth levers which we, intend to push across in this year.
Okay, so currently you have a presence in Maharashtra, Delhi, Karnataka, as well as Tamil Nadu. How many warehouses are you managing, and how are you looking to scale up and expand your presence? Which are the other cities that you're targeting?
So currently, for the last 4 years, we have been able to strengthen our network in South because since we are Bangalore-based, we realized that one of the core focus for us is how far we can capture the South market. So out of the business, our a majority of our business comes from South. We expanded in West and North, in very small pockets of Pune, Bombay, and Delhi last year, and that businesses have also been doing well. The next scope for us is strengthening or deepening our network in North, because North is one of the largest markets. In fact, Delhi is one of our focus areas, being the capital region. And that is where, Delhi itself, is again 10-12% of the overall business as a market. So Delhi will be one of our focus areas. We will be expanding to Punjab, some part of Rajasthan also. So these are the pockets in North which we will look at. Maharashtra obviously is a big opportunity. So we are currently present in Pune and Bombay. The next opportunity will be to look at, the next tier 2 cities of Nagpur, Nasik, Kolhapur, Sangli. So these are the pockets which we will expand in the coming 12 months.
And one can't deny that within this space, there are some very well-established players who are entrenched. How do you plan to cope up with the competition?
So honestly, if you ask me, the business, the distribution business and the logistics business is so big. Like I said, the distribution, FMCG distribution itself is $100 billion business. For us, we have hardly scratched the surface. So from a competition point of view, we are not too worried because, everybody has got a space in this room. And you've been seeing that, there are a lot of traditional businesses which have been, doing very well in, the last 2-3 decades. We are just trying to solve the problem, adopting by using technology in terms of, making it more efficient, both from the back end as well as the front end point of view. And about the most important part of it is, the distribution business in India is a very, very complex business. Let me tell you one interesting thing. I have traveled across the globe. India happens to be one of the most complex distribution market in the world. Trust me, I was in Vietnam, I was in China, we were in Japan. So, in fact, we have one of our Japanese partners who have invested in us in this round as well as in the last round. The opportunity for us is if we are able to solve the distribution complexities in India, I think, it is a very, very large blue ocean which we can look forward for.
Okay, so we wish you all the very best then, and thanks so much for joining in.
And as the chorus grows for the need for more and proper regulations for the norms of AI, nations too have expressed the concerns and have actually swung into action to adopt a balanced approach to AI. Sumita Karim, our colleague, is here with an extensive report on that.
Elon Musk. AI is potentially more dangerous than nukes. Sam Altman says he's a little bit scared of the AI technology. And global tech CEOs mentioned that mitigating the risk of extinction from AI should be a global priority. I can name a few more leaders, but you get the point, right? AI, the poster boy of tech, is driving global leaders racing to establish guardrails around regulating what could possibly lead to mass-scale disinformation, deepfakes, job losses, and perhaps a literal threat to humanity. Sam Altman, to underscore this point, in fact, has been meeting world leaders on regulations. But what do the draft regulations look like in some of the countries that have developed some draft guidelines? Let's take a look. Let's take a look at EU, because EU has taken the first step by passing the AI Act. The AI Act assesses risks considerations of the superintelligence. And these risks can be classified into unacceptable, risk and unregulated, and it's the high risk category systems which will be assessed before being put on the market. Other than that, AI technologies will have to comply with transparency requirements. They'll also need to disclose that the content was generated by AI. It also requires safeguards for preventing illegal content. It would also ban companies from scraping biometric data from social media to build out databases. And then there's an absolute no for social scoring systems. Let's take a look at China, because that's the other country that's shown considerable progress. So China's cyberspace regulator in April drafted measures that included firms to submit security assessments before launching their offerings. More importantly, it will focus on the country's socialist values, and AI systems need to reflect that. Then there's scope for prohibition of profiling based on user activity and retention of data. Very interestingly, these regulations also cover aspects like how AI systems are trained and how users then interact with them. AI companies are also restricted from using personal data as part of their generative AI training, and failing these would invite fines. US. Even though the United States is still playing catch-up on AI laws, but reportedly the country is pushing for reforms that will rein in social media companies for content, including AI content on their platforms. However, chances of having an overarching regulation seem slim, although lawmakers would keep a watchful gaze on AI, according to reports. Reports are also suggesting that guardrails around AI would center around preventing discrimination and protecting user privacy.
And with that, we're absolutely out of time on this week's edition of Startup Central as well. Thank you so much for tuning into Startup Central. And do not forget that you could write to us on sec@etnow.tv and catch you at the same time on Monday.